Welcome back, everybody. We want to take you back to the White House, where members of the financial community are reacting to the president's plan. Senators Dodd and Frank are speaking.
I see very little ideological debate that so often dominates our discussions on other matters before the Congress. I've had extensive conversations with Dick Shelby, my colleague from Alabama, the former Republican chairman of the Banking Committee. He's very anxious to work on this together with us, to put together a joint effort, a joint bill. And I think Barney's just described it very well. There'll be maybe some debate, as I'm sure there will be, about how we achieve these results, but I think we're all seeking the same results. And to that extent, I welcome the president's remarks this morning and look forward to working with him. We're working at it, by the way. I want to emphasize that while there are other matters that are dominating the attention of the Senate right now, I can just tell you that the Senate Banking Committee is working already on drafting ideas and proposals in consultation, obviously, with Barney in the White House on the very bill the president outlined this morning.
Have the leaders of either of your chambers given you any assurances that they'll bring a bill to the floor this year?
We'll have it done this year before we leave. It'll be done.
Let me put it the other way. I think the leaders in both cases have threatened us with a severe chastening if we don't bring it forward. Look, and can I just add to what Chris said? We regard this as very pro-market, because you have investors now who don't want to invest, and that's not good for the economy or the businesses. You have the great majority of perfectly responsible and reasonable financial institutions under competitive pressures from people who want to cut corners. This is an effort to avert the kind of problems we've had before, but also to fully reinvigorate this market in a way that, as I said, is going to be pro-market and pro-consumer. The notion that there's some conflict between protecting consumers and protecting the market is dead wrong, because with investors, unless you've got investors that feel well protected, you don't have a market.
Senator Dodd, you spent the morning at the help markup on the health care bill. Yep. How can you do two things of this magnitude at virtually the same time?
Do you think it's Gerald Ford?
Great answer. Barney just answered all that. No, we're working at, look, as I mentioned, it takes, the leadership has decided they wanted the health care bill to come up. Listen, no one wanted Senator Kennedy back more than I did for this, and I talked to him this morning, had a long conversation with him. I'm still hopeful he'll be back at some point to pick over the reins of this. In the last couple of weeks, we're working together. It's going to be a difficult process, a long process over the coming weeks on that issue. But simultaneously, the Banking Committee, its members, the staff, and others are working on drafting and pulling together a proposal, along with Barney, on the financial modernization issues. The Senate is not going to consider that until the fall sometime. And so if we could do both at the same time, we might try, but it's impossible to do both. And as some of you know, almost a half of all my members on the Democratic side are members of the Finance Committee and the Labor Committee, as well as being a member of the Banking Committee. So in addition to myself, to expect members to be able to function on that basis, that's too much. But the important point I want to make to you is that I've instructed my staff. I've talked to Senator Shelby. I talk to him almost every day about it. We're working to pull together that product that we'll have ready to go this fall.
And can I just say, and first, I apologize for a cheap shot. Gerald Ford was a bright guy. Yeah. I should have resisted the cheap shot. I don't always. But this has been a pattern that we've had. The House and the Senate are obviously differently constructed. House members have fewer responsibilities in terms of across the board. We have procedures to let it go quick. We've collaborated on a number of pieces of legislation, on credit cards, on mortgage foreclosure, on an affordable housing trust fund. And the way it's worked, given the nature of it, the House gets started. A number of these things can be sort of done by general agreement. We get to a point where there are some specific issues that have to be dealt with. And if you look at the pattern, it has worked very well. The House gets an earlier start because of the nature of the institution and the fact that we focus this way. We then get to a point where the number of things, consensus forms in the society, in the Congress, the number of issues that have to be sort of decided narrows some. There's then a joint process where the Senate does those and the House does those. And I think you're going to see the same thing. And I would recommend you look at the way the credit card bill came. Look at the way the Affordable Housing Trust Fund came. Look at the way we did some of the mortgage foreclosure things. You're going to see a very similar process with similarly good results.
The memorandum the president's going to sign this afternoon, extending same-sex benefits for same-sex partner, does that go far enough? Is that going to appease the community?
As I understand it, it goes as far as he can legislatively. Legally, we will have to change we have to give him more legislative authority. But yes, the president can do the maximum that he is allowed to do under the law, and it's then going to be up to the Congress to change the law.
What do you think about giving the Fed so much power, given the concerns over how well the Fed has done leading up to this crisis?
The health care bill by the end of the summer.
As I know, Senator Barker's announced a delay. Our intention is to keep going forward. I know it's going to be a long pull, but my experience is unless you have a product down and the amendment process begins, that sort of without that, you don't get the ideas back and forth. Otherwise, they just meetings delayed. Some people show up, some don't, and you never get to the conclusion of it. So you got to begin the process. My intention is to stick with this over the coming weeks. Senator Enzi and I talk all the time. Our staffs are working, and I'm still confident we can have a product.
Let me respond. I have an important question on the Federal Reserve, and that's clearly a very important question. Look, you start out with agreement and you build to increase it. There was an agreement on the function. The function is systemic risk. Now, an agreement in the Senate on apparently both sides. In the House, I should say, that's partisan. My Republican colleagues say systemic risk is fine the way it is, the way we deal with it. They don't need any resolution powers. They've cited the Lehman example as a good example. We have sharper differences in the House and in the Senate on the party basis. But we have an agreement that we have to do something about systemic risk, that the Fed has to play an important role, and there also has to be a structure in which the other regulators are involved. That will have to be worked out. There's also some agreement that the broad powers the Federal Reserve got from Herbert Hoover in 1932 to lend out money, because that's when that was signed, need to be somewhat curtailed. So we'll be working on both tracks. And yeah, the issue of how you have an effective agent on systemic risk regulation, but a structure that gives you assurance that it's done in a kind of a collegial way, that's an issue that we'll be working on.
Senator Dodd, on giving the Fed so much power, given the concerns over the Fed lately?
Well, I agree with what Barney has just said to you. Clearly, I think the role we need is clearly a role for systemic risk regulator. And my view is that there's a strong and healthy debate for having the Fed do this. This is a known quantity. They have expertise there to do it. The legitimate issues that have been raised as to whether or not an agency whose primary function is to deal with monetary policy can assume that responsibility without bringing some bias to that discussion of what systemic risk is and how you enforce it. So I appreciate the fact the administration has adopted the idea of a council in all of this. That's a step in the direction. And I'm not embracing yet the collegial alternative to this idea, but I think it's certainly worthy of a thorough and full-throated debate and discussion as to whether or not that's a better alternative than investing the Fed. There's not a lot of confidence in the Fed at this point, and I'm stating the obvious over what's happened over the last number of years. So I hear that expressed by my members of my committee, both Democrats and Republicans, who are looking for an alternative. But I would tell you at this juncture, there's been no decision as to which side or the other than I think there's a general consensus, generally, that a systemic risk regulator is necessary.
And the question is, can you find a way to have an effective agent, which the Fed would be a candidate, the leading candidate for, within a collegial structure that reassures people? So I mean, that's our job to try and work that out.